Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be discussing and doing our weekly recap for July 9th through the 13th. We're going to be discussing some of the new tariffs that were imposed this week, go over some healthcare, consumer, financial, and tech stocks that were in the news, and also cover our four main indexes and then kind of recap it looking at home builders, oil, bonds, gold, silver, and the dollar, and then end it looking at earnings coming up next week. So that's what's in tune for today. Of course, if you are brand new to the channel, I do make stock market and investment style videos every single week, so consider subscribing. And if you are a recurring subscriber, thank you guys for tuning in. I truly appreciate it. So let's go ahead and get started. Last week on Saturday, we did our weekly recap. The S&P 500 had climbed up by 1.52%. The Dow Jones had climbed up by 0.76%, and the NASDAQ had climbed up by 2.37%. Oh, we also have the Russell there, had an increase of 3.10%. They were actually I was expecting the Russell to not do so well this week, and they actually had a bit of a negative week this week. And then all my portfolios together moved up to, a 1.43%. So kept up with the S&P 500 last week. Let's see how we go this week. Earlier this week, I made a video where I made a brand new app on the Google Play Store. It's only available there for now. Eventually, I would like to design 3 to 5 different apps that do different specific things, or have courses, or you can read them for stock market or dividend or real estate specific information, and then kind of work from there. But if you guys would like to check it out, very quick, very easy calculator here, and I just updated it today with some new changes. So starting with the S&P 500, we have a 5-day change of 1.5%. On Wednesday, you can see that was the only down day, and that was when the tariffs, the futures and the after hours were in the negative. The Dow Jones, I believe, lost 300 points that day going in the futures, and starting very negative, but kind of worked it up towards the end of the day, and then of course recovered all of its losses on Thursday, and Friday just added on just a little bit there. So year to date up 4.78%. The Dow Jones, again with the tariffs on Wednesday, otherwise 5-day change up 2.3%. Year to date up 1.21%. So the Dow Jones finally back into the green once again. This thing has been trading and swinging positive, negative, positive, negative. I do believe with financials coming out with earnings, a couple of them didn't do so well, but a couple of them did do well. So I believe some of the financials will start to kind of help the market either retain or stay where they're currently at, or slightly move up here going into the next 2 quarters. We have the NASDAQ again Wednesday. Those tariffs that affected the tech stocks. 5-day change up 1.79%. Year to date up 13.36%. And the Russell 2000 had a negative week this week, down 0.41%. But after last week's run up of over 3%, I did expect the Russell to kind of have a bit of a breather this week. Year to date up 9.87%. And then of course I did my calculations on my portfolios. My difference for this week is 1.78%. So I did beat the S&P 500, didn't quite keep up with the Dow Jones, kept up with the NASDAQ, and beat the Russell. So those were the changes for the indexes in my portfolio going into next week. Now, currently the futures are looking positive. There wasn't, we had the JP Morgan, Wells Fargo, and Citibank that did their earnings on Friday. We have some more earnings coming up next week, which we'll discuss here towards the end of the video. But otherwise, a pretty calm Friday. I believe Monday should be pretty calm and positive, depending on what sort of news comes out that day. I don't expect to have anything going crazy. So take a look at some of the most active here in the after hours. We have Visa, Microsoft. Microsoft was hitting all-time highs once again. And in the after hours, continuing to move up. Cisco, they're doing some positive. Pfizer, we're going to be discussing them here. They were mentioned by President Trump this week. And we have Comcast, AT&T with Time Warner. I know there was a bit of a lag. I think I deleted that from my notes. They, you know, some pushback there. We had Wells Fargo moving up here in the after hours after their earning release. And that's about it. I don't see very many other financials. I expected to see, oh, Bank of America there. Okay, it says 0%. I'm pretty sure we would have more activity here in the after hours. So first off, Pfizer was on the news this week saying President Trump specifically called them out, saying that their prices were too high and they were kind of scamming people. Well, they responded and also kind of discussed, and then this news came out that they're actually going to be looking at possibly rolling back some of their prices over the next 6 months or some amount of time. And then they also mentioned that they had a discussion with President Trump, and you know, because they were criticized by him earlier this week. So their stock actually went up and down this week. If you were a swing trader this week, you could have bought at some great lows, you know, held it through those highs. If it dipped again, rebought at those lows. So this week, Pfizer, I think it did really well. 1.13% up. Year to date, up 3.62%. Wasn't tracking very many other healthcare. Let's see here. Nope, no others. I know Procter and Gamble and Johnson & Johnson were there, as well as consumer goods, but I don't believe they had a positive week this week. Pepsi. So some of the consumer stocks have done really well as people are moving from, we're 10 years out of the last recession, and the market's been on fire lately. Technology's been on fire. Consumer stocks have actually had a really good week this week. I don't know if Pepsi had specifically released earnings. I think they're coming up. Oh no, they did release earnings. So Pepsi, their shares were higher after earnings here on Tuesday by 4.76% because their earnings did come up better than expected. Their revenue growth was also a big surprise to the analyst, and that helped them break out and kind of continue upwards on their trend. You can see they are still down year to date by 6.03, but I have seen a lot of people mention Pepsi is currently down year to date. I haven't done any sort of I haven't used Y charts to really screen them to see how they have done financially on their financial metrics, but they are coming off those all-time lows right there for the year. So this could be a good buying opportunity there for Pepsi. Walmart, same boat. Walmart had some news several weeks or months ago where they were down at a point of nearly 20%. I believe they're in my wife's Roth IRA. This stock was down, 25%. If you had bought during those lows, you would have made a great buying opportunity. I included this one here because of the change, 5-day change up 3.77%, still down for the year by 11.19%, but I do see some recovery there as well. They are changing up the way that their online presence, which I believe will continue to help them out. Again here, Costco, another one. This one's actually done very well. Costco, Lowe's, Home Depot, I believe those three stocks, those are all the retail stocks, but those are very strong, member focused, and loyalty, member loyalty. You don't go to Costco because, people don't sign up for Costco unless they really want that membership, and a lot of times you're going to get some really good deals. I know you get a Costco at least, every couple of weeks, right down the street from where I live, so very easy to go to. 5-day change up 3.3%. Up year to date 16.34%. Now into the financials. JP Morgan had announced their earnings on Friday, beating Wall Street's expectations, and they actually said that the loan demand has increased thanks to the strengthening economy. People are going out there getting more loans. I know I am continuously making, and I'm trying to buy my actual first real estate investment property, but all my offers have came back and have been either declined or have been beat out. So I'm continuously, every day, that's my goal. Look for one house, run the numbers. If I can meet the cash flow, the cash on cash return, and those numbers, and I get with my realtor and put in an offer. So hoping I should nab one or two, in contract within the next month or two. So that was JP Morgan here. You can see 5-day change, 2.21%. Year to date, down still 0.54. But this one was down. No, it was positive. When I did my comparison of the Dow Jones. 15 stocks were positive, 15 stocks were negative. I believe JP Morgan was positive by 2%, right around there. So it has pulled back recently, but with good earnings, a good future outlook, potential, you know, more loans means people are paying them more interest, which will increase their bottom lines kind of going forward. So I do see JP Morgan being one of those that's going to be rebounding. Next, we have Bank of America. I don't believe they had reported earnings yet, but I think, let's see here. Bank of America. Okay, yeah, so Citibank, JP Morgan, and Wells Fargo are ones to report their earnings on Friday. Bancorp, see if I can go over here. BAC. Okay, so they're not coming up next week. Apparently not. So I'll have to see when their earnings are expected to fall. But they're kind of moving along with the financials. Financials being up right now and expected to be positive. So 5-day change up 1.86% still here. Down year to date 3.29. Now Wells Fargo, I have a friend at work who's also an investor and had been buying into Wells Fargo. He finally got rid of this stock. I'm not sure when he had got rid of it. I was talking to him about his Amazon shares and his holdings there. He's continues to buy those even as they're climbing. He's just kind of averaging up. That's completely fine. So 5-day change for Wells Fargo down 0.95%. Wells Fargo actually sold off this morning after the announcement showed that they had less fees than they did a year ago, and that's due to their loans actually shrinking in comparison to JP Morgan, where their loans are increasing. Wells Fargo's loans are actually shrinking. I think this is due to all the all the news that they've had negative against them, where they're opening fake bank accounts for their customers or putting their customers in these high expense ratioed funds, and just all the stuff people are trying to avoid. So people aren't out there looking for this riskier loans. And if you're going to be getting a loan anywhere, check out your local credit union, or there's a lot of places online that actually offer better rates. And yeah, so along those lines, I think we're going to see Wells Fargo. I'm not sure where we're going to see that one kind of go. Citibank, or Citigroup, also released their earnings. They were lower by 2.23% today after they announced that revenue for the quarter was actually lower than expected. Their overall profit was higher, and their earnings per share came in higher than expected. But this was all due to just share buybacks. They had announced a huge share buyback, and that's what kind of affected them. So analysts and investors said, you know what, not worth it. Sold off there, 2.23%. 5-day change down 0.21%, down year to date 9.96%. I think JP Morgan and let's see here, Goldman Sachs, JP Morgan and Goldman Sachs are usually my two financials that I go to if I'm looking to even look at a financial institution. So Goldman Sachs here haven't released earnings, but again, kind of following the trend that they did last time they released earnings, beating expectations, beating earnings per share. They're gonna, let's see here, GS. So, okay, so Bank of America is actually there on top, 716. So they're going to be releasing their earnings on Monday. So the other one here I want to check out was Goldman Sachs, which is, I don't see it here on my list, but I'm going to have this list. I already showed it off on my Facebook group if you guys are interested in checking that out. Otherwise, it'll be in the description below, and you guys can just see all these earnings that are coming up here in the next few days. So either way, Goldman Sachs up 2.08%. Year to date, still down 11.13%, but still a great financial. I threw this one in there. It's not, it could be a financial. It's a very big institution. I've seen a lot of investors out there who have been buying Berkshire Hathaway versus the S&P 500. You can see Berkshire Hathaway had 5 out of the 5 days positive, regardless of those tariffs being enacted on Wednesday. They still recovered all their losses for Wednesday, ended actually up in the positive by 0.01%. 5-day change up 1.81%, and they're down year to date. So if you guys are looking to invest in Berkshire Hathaway, Warren Buffett's there. Now, kind of moving in. I want to do at least drop a ETF dealing with the financial sector here. Ticker symbol here is XLF. This one has top holdings here: Berkshire Hathaway, JP Morgan, Bank of America, Wells Fargo, Citigroup, and a few others here. Goldman Sachs. I'm surprised Goldman Sachs isn't much higher. I would actually move it much higher. Replace it with Wells Fargo. Kind of swap those two around. But otherwise, pretty good ETF there as well. Or if you're just looking to create your own ETF, instead of using this ETF, if you were to invest over in M1 Finance, create a financial pie, put Berkshire Hathaway, JP Morgan, Bank of America, and Goldman Sachs, and that could be your financial sector with zero expense ratio. But just an idea there. Okay, and on to technology now. We have Netflix. Friday, they were downgraded. That knocked them off their highs by 4.25%. 5-day change, negative 3.05%. They're still up year to date 106.19%. This one, I don't see any other competitors there right now. There are competitors out there. You can see a few of them here. I wouldn't consider anyone here really a competitor. Some of their competitors I would say is Amazon with their Prime, or Disney with their coming up streaming service. Netflix, Hulu, those ones possibly, but Netflix is just expanding and taking over. They're growing, and with all this extra available cash there, or not really available cash, you may end up seeing them do some acquisitions and buy some of those smaller companies kind of going forward, but we'll see what happens here with Netflix. I'm actually really surprised this one just continues to climb week after week. And it's nice to see that little breather there. This could be a great buying opportunity if you guys are following Netflix. So Microsoft there, they're going to be releasing their earnings here very shortly. They're moving up because of the expectation. Up 5-day change, 4.22%. Year to date, 23.25. I mentioned this in a video, I believe it was last week's recap, that the FANG stocks and the FANGMA with Microsoft in there have done really well. If you guys had bought like an ETF or created a pie with Facebook, Amazon, Apple, Netflix, Microsoft, Google, and those specific stocks, if you have put a portfolio of those stocks together and just had invested all your money in there, you'd be pretty well off so far this year, having hit all-time highs in just about every single one of those names. But interesting there. Now, kind of coming towards our end here, we have home builders up 1.19%. I saw an email from Trulia, I believe, that we have 23% more houses on the market currently than we did last year. This is just due to, millennials, they say, are not buying as many houses, but again, it's all due to affordability. My thing was, we're living in a 3-bedroom, 2-bath right now. We had actually looked at a 5-bedroom, 2-bath to move into earlier this year, but the price target and the way that they were selling it had, it was at or exceeding back in 2007's highs, and I just felt that at this time, instead of buying into a 4 or 5-bedroom building that is above the market price of where it was, say, 10 years ago prior to the crash, I would instead use those funds to begin my investment journey in my new, my fix and flips or my rental. So that's my focus. I was going to buy a house, but then I decided, what? Prices are super high. How about I go look for some value buys, start up buying my rental portfolio right now, and when prices drop in the future, I would have got great value buys on these rentals. They're producing cash flow, and now this house that's a 5-bedroom, 2-bath that was $500,000 is only $300,000. So much better price mark. Hopefully, house prices do collapse. I'm hoping for that, but let's go ahead and continue to see. So oil dropped on Wednesday a little over 5%. This is due to a report coming out that overseas in Saudi Arabia, I believe, they had they released great supplies for them, which affected us negatively. You can see that obviously dropping oil here by 5% on Wednesday, but has continued to climb. There was an article I put on Facebook talking about Delta Airlines and a few other airliners decreasing their earnings in the upcoming quarters just due to the current price of oil. I know here it's around $3, which is pretty expensive, but I do believe that we'll see oil kind of continue to kind of climb there. So the dollar did move down as of last week. So here we are showing, actually no, it moved up. Dollar moved up. So let's put out our 5-day chart here. So you can see here 5 days ago it was at 93.96. It is currently sitting at 94.70. So dollar did move up this week. Most of the time when the dollar moves up, you're going to see gold and silver drop, which, you know, if the dollar moves down, you may see gold and silver climb slightly. But here, silver and gold have continued to kind of fall here. Silver dropping by 1.33%, continuing to fall, not at their all-time lows, I believe here. So here, oh, they are at all-time lows. So if you were to buy into silver right now, this thing was back at 16 bucks not too long ago. Now they're at $14.88. Year to date, down 6.94%. Taking a look at oil or at gold here, 5-day change down 1.05%. This, let's see here, down 4.88%. Take a look at year to date. So you're at all-time lows right now as the economy is, you know, moving very quickly. Earnings are coming out. Businesses are super profitable. People are putting their money elsewhere other than, you know, let's see, minerals and materials such as gold and silver. Maybe they're invested in themselves or, you know, other businesses in the stock market and such. So here we have the bond market going up slightly here. I know I was tracking the yields. I was watching another YouTuber and reading the news on the 3-year, was it? No, 10-year and 30-year yields had actually decreased to single digits, which was something he had said had happened prior to the '08 correction that took place. So as that begins to kind of flatten out, we may see and continue to see banks continue to not do so well, but who knows? Time will tell. There's really nothing there. Prime rates have remained the same at 5% as compared to 1 year ago at 4.25. Now, a couple stocks that have earnings next week. So next week we're looking at the 16th to the 20th. So right here, a couple, Johnson & Johnson here, for example. We have Netflix going on. Those are some of the names that I recognize right off the bat. Let's see, all the way down here. I thought we had Microsoft kind of going on as well next week, but we do have a number. So anyways, instead of trying to cover all of these stocks coming up with earnings next week, I will have this one in the description below and also in the comment section. If you guys are interested in own any of these stocks with earnings coming up, check out this article. You can see the thing is huge here on the side. You got that scroll bar. So this goes all the way to having a second page where it goes all the way to August 7th. So hopefully that's pretty, you know, something to kind of check out, and hopefully it'll kind of help you guys out. So that is it for this video. If you guys have enjoyed it, remember to hit that thumbs up button below. If you are brand new to the channel, remember to subscribe if you are a subscriber. Thank you guys again for coming back. If you guys do have an Android device where you guys are able to download an app and would like to check out my app, download my simple dividend calculator. It is in the description below. It's very easy, lightweight, only, you know, very small. Let me know and give me feedback if there's any other apps you would like to see on the App Store that are either simple and fun, maybe some ideas. Yeah, I would like to create a game that would benefit my son. You know, he's 3 years old, but he's on the you know, iPhone, Android quite often. So I'd like to create some sort of a financial app to aim towards the younger generation. So I think that would be kind of fun. But anyways, that is it for this week's recap. Thank you guys for tuning in. I will see you next time. As a quick disclaimer, I am not a financial advisor or tax professional. The information provided is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor myself, trying to help others make their money work for them. Thank you guys for tuning in. I will see you next time. Have a great day. Bye.